Good morning, guys, and welcome to the show. Listen, glad to have you guys here. Welcome, ladies and gentlemen. Now, today is Thursday, April 25th, 2019. We're going to get started. There's a lot of things we got to look at that's going on. I got something new on my radar. Let's start the charts right here, and let's take a look. This is what's new on my radar. South Korea. Now, you know Seoul, South Korea. Huge city, and beautiful city. Right next to North Korea. What a place to park, right next to North Korea. Talk about neighbors, Anyway, here's the thing. South Korean GDP, shrank. They've just... Well, going back to the financial crisis. Now, you see this big red spike here in the middle around 2008, 2009? That was the financial crisis, 2008 and 2009. And you know what? You can see that they've went all through these green years, these green bars indicating that everything since 2009 up until 2019. And look at this big red bar all of a sudden. Right at 2019, indicating that their economy is shrinking. Their GDP, it's unexpectedly shrank in quarter one. They're down to 0.03% negative GDP. Sign of a recession coming to South Korea. A huge economy, South Korean economy. They make all kinds of different products in South Korea. Yeah, huge. This is huge. This is big. This is big, just like the German numbers are coming in negative. And the United Kingdom numbers are coming in negative. The Canadian is probably going to come in negative too. Italy's already in recession. So these countries, one by one, are breaking down into recession. This new economic malaise. China. Oh, China's probably negative growth too, but they're never going to admit it. They're always going to stick to this 6% GDP that they say they have, which is a fairy tale number in China, because China's the second largest economy on earth. Now, the United States economy, it's rolling along. It's rolling along. But we see an awful lot of retail stores and stuff closing. The retail sector's been just smacked down. And you can't all blame it on sales, internet sales and everything else. It's a real slowdown, and malls are closing. People are losing jobs in retail left and right. The United States economy is not doing that great, but they're looking at it and they're like saying, because it's not completely in a recession like these other economies, they're looking at it and holding it up on a pedestal and saying, look at the United States economy and look at the United States stock market. And the United States stock market is completely has nothing to do with the American economy, but they hold it all up on a pedestal and say, look, while the rest of the world is starting to slide down. Well, the rest of the world can bring the United States economy back down into a recession quick enough, Let's get on and take a look at the silver price now. And, silver has been taking an awful beating. It's struggling, very much struggling to stay up to $15 the last few days. It's been being smashed down, and then it bounces back up. I must say, it has an awful lot of resilience to bounce back up to $15 after they smack it down with this paper short contracts. Let's take a look at gold. $12.76.80 today. It's up 80 cents. Well, it's up basically nothing. But it's trying to hold on to that mark up in the high 1200s. Just like silver. They're both hanging on. They're showing a lot of resilience, considering the pressure that's on them. How these paper contracts control the price of the real physical. It's absolutely ridiculous. It's a ridiculous market, the fact that the paper can control the price of the real physical asset. Extremely undervalued, gold and silver. Let's take a look now at cryptocurrencies. Cryptocurrencies today is $5,422.49. And what we're seeing is, we've seen a lot of movement upwards in the last couple weeks for cryptocurrencies, you know, and they were down in the $3,000 range. Now they're up in over 5,000. We've seen some moves from Bitcoin into the alternative currencies weakened, and we've seen moves into Bitcoin. And the thing is this has held the price up for Bitcoin while the market cap's been dropping. This is a very bearish signal for me. Let's take a look at cryptocurrency market capitalizations. When this happens, you see the Bitcoin dominance go up. And Bitcoin dominance is extremely high right now, 54.5. And we see down movement in the altcoins and movement into Bitcoin. We're looking at a market cap today of $177.7 billion. It was up into the 180s there yesterday, but it's dropped back down into the 170s. And we see the Bitcoin price hasn't dropped down that much, but we see the altcoins have been suffering. Look at Litecoin, 74.05. Now you got to realize that price was over $90 a few days ago. 164 for an Ethereum. XRP has been taking a beating. It's at 30 cents, 30.2 cents. Bitcoin Cash is $282. EOS is $4.79. Binance Coin is $22.83. Stellar is at 10 cents. So we're looking at a market that's basically, I think it's treading water now at this point. I think it's getting ready to go sideways for a ways. And people that are interested in crypto, this gives you an opportunity, a chance to have enough time to buy in before we move into this next bull market that's coming in the future. I can see it being as far out as 6 months even before it actually gets a toehold and starts to go again. But the next bull market is going to yield us cryptomania, worldwide cryptomania. That's what's coming in the next bull market. Let's take a look at the Dow Jones Industrial Average. It's off 59 points, but just a second here. The market I don't think has opened up quite yet. It's off 59 points on yesterday, but we're going to have to wait and see what it does today. You know, this market, I can see it rolling over pretty soon. But they're going to keep pushing it as long as they can. And I'm in there right now, and I'm wondering how long can they carry this and keep this going. Let's take a look at oil today. Now the chart for oil today really is stinky. They've messed the chart up on oil today. But we're seeing prices in oil move upwards. This is a very precarious situation they've created with Iran and oil. It's almost like they're trying to hold a balance here. It's very precarious, you know, and they're trying to cut Iran off. Iran's mad. Iran says, okay, we might cut you guys off. We might put a blockade of some sort in the shipping lanes where they ship oil, you know, and they're saying, well, that's just a bunch of empty threats. Most of the market says, well, that's just empty threats by Iran. We'll have to wait and see. You know, Iran feels cornered right now. Now, that's the way it's going. Now, let's take a look now at the bond market. And you know what we're seeing here in the bond market is we're seeing mixed movement. We're seeing some of the short end of the yield curve fall a little bit, and we're seeing a rising prices on the long end of the yield curve. I'm just going to run down through and list them. The 1 month is at 2.41. The 3 month is at 2.42. The 6 month is at 2.44. The 1 year is at 2.42. The 2 years at 2.33. The 3 year is at 2.29. The 5 year is at 2.32. The 7 years at 2.42. The 10 years at 2.53. And the 30 years at 2.95. So we see an awful lot of the yields on the real short end of the yield curve are actually higher than the yields in the middle of the yield curve. So we still have an inverted yield curve. That has not went away. It's still inverted. Now let's take a look at the US dollar index. Most notably, this is what's up the most. 98.26. is really high. You know, it's getting really high. It's getting almost up to 100 or higher on the U.S. dollar index. So we got a really strong dollar out there right now. This is going to hurt emerging markets at this point in time. It's up to the area where it's going to start to hurt emerging markets. Listen, thank you guys for tuning into this market report. Stay tuned, and this weekend I'm probably going to be doing a special show. Really appreciate you guys, and give me a thumbs up and like my videos, and we'll catch you guys in the next episode. Bye-bye, guys.